Yes. So in the previous classes, last 2 hours, we solved one problem. We discussed one problem of final account. So now let us see the problem number two. Problem number two, we are going to discuss now. See this. From the trail balance of Lanco Limited, prepare final accounts in the statutory form. So whenever the trail balance is given, first you have to identify the item belongs to which working note. So one by one we have to discuss. Then we have to do the format. So now let us see this one. Particular and to amount column is given, debit and credit aspect, both the side information given. So now let us see cash at bank. So cash at bank, under balance sheet there is a working note number cash and cash equivalent. There is one separate head is there under asset side. So you can say that the cash at bank goes for working note number 19. So whenever you are solving the problem, there you can write where it goes. So cash at bank working note number 19, cash and cash equivalent. So now next thing is machinery. Machinery is a fixed asset. So it is asset head fixed asset working note number 11. So what we are talking about is this format. See this format we have to go through once. So in the last class also we have discussed about this format. See this 1 to 21 notes are there for balance sheet, and for profit and loss account 22 to 30. Total 9 notes are there for profit and loss account. So now machinery, it is a fixed asset. That is why you have to consider it under working note number 11. Yes, next thing 15% HDFC bond. So this HDFC bond is nothing but investment made by the company. It is an investment made by the company in the form of uh, a private bond. HDFC bond means it is a private bond. So company can make the investment in mutual fund, government bond, gilt edged securities, anything it can make the investment. But we have to see it is a long term investment or short term investment. So here no information is given, so we'll assume that it is long term in nature. So this information you have to consider under non current investment working note number 12. Then next thing is interest on investment. Interest on investment, if you see, there is credit balance is given. So credit side information means it is an income. Income, so where it comes, other income. Other income working note number 23, that is under P&L account, second working note. So there you have to show this information, that is interest on investment working note number 23. Then debenture redemption fund investment. Debenture redemption fund investment you have to show under reserves and surplus. Why? This information is related to fund category. So under reserves and surplus we have already discussed that there are two categories. One is reserve category and second one is profit and loss account category. So here this debenture redemption fund investment you have to consider under reserves and surplus working note number 2, that is liability second working note. So whatever the information or whatever the item appears in the trail balance, it has to appear once. Then whatever the adjustment given to the problem, that is given in the problem, that has to appear twice. So that we have to consider. Then depreciation, two types of depreciation is given. Depreciation on machinery and depreciation on building. So it is already there in the trail balance. Whenever it is already there in the trail balance, you have to show this under depreciation and amortization expenses, that is profit and loss account note number 29. There you have to show. So what do you mean by amortization expenses? If there is any return off is made from certain asset, then that information also you have to show. Amortization means over the period of year you are writing off certain assets. So that is the meaning of amortization. Then building is a fixed asset working note number 11. Then interest on debenture. So this is nothing but finance cost. Finance cost means you have to show this information under profit and loss account. Working note number 28. There is separate working note is there. Finance cost. There debenture interest comes. Then bank charges, interest on loan taken. So all these things are finance cost in nature. So there you have to show this information. But there is an adjustment. If you see this till 39 2014 interest is paid. So this trail balance they have not given information. So we'll assume that this trail balance is prepared at the year end. So year end means our financial year starts from 1/4/2014 and ends on 31st 3 2015 for this sum. So 39 2014 means how many months interest is paid? Total 6 months. That is April, May, June, July, August and September. So remaining month interest is not paid. So again remaining month is 6 months. So that outstanding interest also you have to calculate. Then debtors and creditor. So debtor and creditor. See this debtor balance is given in the debit side. Creditor balance is given in the credit side. So debtor comes under trade receivable. Trade receivable information is there, right? So there you have to consider debtor information. Debtor information you have to consider there. Then what about creditor information? Creditor information you have to show under this one trade payable information is there. There you have to show a creditor information. So working note number you have to remember. So trade payable working note number is 8. Then a trade receivable working note number, just you have to check, I think it is 18. See this, yes, 18. Trade receivable is 18. Then next one we have to see here purchase and sale information. Purchase information, you know, that is purchase of a stock in a trade. Under P&L you have to show under working note number 25. Purchase of stock in trade. Purchase, if there is purchase return you have to deduct from the purchase and you have to write the final answer. So that is about purchases. Then similarly there is sale information is given. See this sale information is 1,24,000. So sale is nothing but revenue from operation. Revenue from operation, that is P&L working note number 22. So first working note of P&L account, there you have to show this revenue from operation. Then debenture redemption fund, any type of fund, working note number 2, balance sheet. That is general reserve. There you have to show this debenture redemption fund. Share capital, very easy. First working note. Working note number 1, share capital. There you have to show this amount. What about interim dividend? Interim dividend you have to see where if there is an adjustment, then you have to show that in P&L adjustment their interim dividend comes. So there you have to take this information. Then taxation provision. So taxation provision in this sum there are certain adjustment that we have to discuss later. So for the adjustment purpose we have to use that balance, taxation provision balance, which is already given in trail balance. Then profit and loss account information, if you see this is already there in trail balance, so it is brought forward information. Brought forward information you have to show under working note number 2, that is balance sheet working note, under the head reserves and surplus. So surplus means what? Whether there is a profit and loss account, in profit and loss account, whether there is a profit or if there is a loss, so that we have to show. Then director's fee. Director's fee, if you see, it is other expenses. Other expenses because it is debit information. So you can take this as other expenses, working note number 30. Then what about carriage on purchases? Carriage on purchases is also other expense. So you have to show this information. Again, working note number 30, that is P&L last working note. So there you have to show this information. Then what about wages? Wages, very simple. Salary, wages are employee benefit expenses. So whenever employee benefit expenses are given, working note number 27. So you have to remember the working note. Very important. Working note number also exact same working note number you have to write. So employee benefit expenses, you have to consider wages, and you have to see if there is any outstanding wages given in the problem. If there is a outstanding wages, then you have to do the adjustment also. Then next one, discount on debenture. Discount on debenture is working note number 21. Why it is 21? Because it is other current asset. Because whenever we are doing horizontal form of balance sheet, there we write in the asset side discount on debenture. Then preliminary expenses also we write in the asset side. Asset side under current asset, other current asset. So working note number 21, last working note of a balance sheet. There you have to show this information. Then interest on debenture redemption fund investment. Very simple, working note number 2. Why? Because this interest is related to the fund. Any fund information we have to show in working note number 2. Then wages outstanding. See this. Wages outstanding is given in the trail balance. So wages outstanding is other current liability. Suppose there is a salary outstanding, wages outstanding, unclaimed dividend, all these things you have to show under other current liability, that is working note number 9. So that is under liability last but one working note. Working note number 9, you have to show this information. Then stock. Stock, they have said opening stock. How we know that is opening stock? Because date is given at the beginning of the financial year. That is why this opening stock we have to consider under changes in inventory. Changes in inventory working note that comes under P&L account. Statement of profit and loss account, there is one working note that is changes in inventory, working note number 26. There you have to show this information. Along with this opening stock, you have to compare closing stock information also. Why? Because we want changes. So what is our opening stock and what is our closing stock? Whatever the difference we have to show as changes in inventory. Then one more inventories comes under balance sheet working note. So there, that is working note number 17. So there you have to show only closing stock information or closing inventory you have to show. And you have to see whether a market value is given or a book value is given. So whichever is lower, you should take. So that is the one more point you have to keep in mind. Then goodwill. Goodwill is intangible asset. See this intangible asset, but it is fixed. Under fixed asset, you can show this information. So that is working note number 11. Tax paid, there is adjustment. In this problem, there is adjustment for tax paid that we have to see. Then office expenses, that is, it is other expenses. Working note number 30. So you have to show this information under last working note of profit and loss account. Then salary. See this. Salary is again employee benefit expense. Working note number 27. But for 11 months they have given 9,900. But we want salary for 1 year. 1 year salary we want. How to get 1 year salary? They have given 11 month salary. So divided by 11. 9,900 divided by 11. You will get 1 month salary. 1 month salary is 900. So you have to add that 1 month salary to the 11 month salary in order to get 1 year salary. So that 1 month salary you can show it as outstanding salary. So now this is very clear. Outstanding salary you can show the information. Then again outstanding salary where you will show other current liability. Other current liability working note number 9 under balance sheet. There you have to show that information. Then bad debts, other expenses. There you have to show, and there is adjustment for bad debts. That you have to keep in mind. That is, you have to add a new reserve for doubtful debts or a new RBD, and you have to deduct old RBD. New RBD means whatever the information given in the adjustment, and old RBD means whatever the information for reserve for doubtful debt or bad debt given in the trail balance. So that we have to see. So that is about bad debts. Then 15% debenture. 15% debenture, if you see, it is a long term borrowing. So whenever it is a long term borrowing, you have to consider this information under working note number 3 balance sheet. Yes, and you have to see whether there is outstanding interest. Then that also you have to add. General reserve directly working note number 2. Transfer fee. Transfer fee. Now see this. Transfer fee credit balance is given. So if debit balance is given, other expenses, that is under P and L account. Now credit balance is given, that is why other income. Other income, that is working note number 23. So there you have to show this information. So that is about transfer fee. Then provision for bad debt. See this. Provision for bad debt is given in the trail balance. So this you can take as old RB. Old RBD you can take and you can deduct from bad debts. Unclaimed dividend. What about unclaimed dividend? It is other current liability. Working note number 9. So there you have to show this information. So all the things we have discussed, whatever given in the trail balance. After this, there are certain adjustments we have to see. See this now, adjustment. Now adjustment, I have already told it appears twice. So where and all it appears, we have to discuss now. See this. Make a provision for doubtful debt at 5% on debtor. So first thing, you have to consider this information under working note number 30, that is P&L last working note other expenses. There you have to add this information to the bad debt. Why? Because this is new RBD. Then one more where you have to show trade receivable. Under trade receivable from debtor, you have to deduct this information. Why? Because this is bad debt. New RBD has to be deducted to get the final debtor answer. So two-way adjustments are there. For every point, two-way adjustment. See this now. Stock at close 25,000, market price 22,500. Whatever is low or whichever is low, that you have to consider. So now, where and all it comes? One working note number 26 under P and L, that is changes in inventory. There you have to consider once. Then one more thing is under balance sheet inventory working note is there, that is working note number 17. So there also you have to show this information. Then transfer to debenture redemption fund 2000. So now where you are going to show this one information. So now this is very important. Transfer to debenture redemption fund given in the adjustment. So first you have to take this under reserves and surplus working note number 2. There you have to add to the reserves. First you have to add to the reserve. Then there itself there is one more category, profit and loss account or surplus. From profit and loss account, you have to deduct this transfer to reserve fund. Why? Because from profit, they are making the transfer. If even though it is not given, we'll assume that it is taken from company's profit. So profit, if there is a positive balance, then from profit, you have to deduct this information. Then write off 50% discount on debenture. So discount on debenture information is given in the trail balance. Now write off 50% means one half you have to take. So where and all this information comes? One is 21. One is 21. There you have to show other current asset, and one more thing is 28. Finance cost. Finance cost information there you can show. Then provision for taxation. Provision for taxation is a short term provision. So it is for 1 year or less than 1 year. So first thing, from the profit prior to exceptional item and taxes, that one answer you will get, that total revenue minus total expenses, you will get profit prior to exceptional item and taxes. From that you have to deduct this one. Deductions are there. Tax expenses deduction, provision for taxation you have to deduct, that's P&L adjustment is there. And one more thing in the balance sheet, that is working note number 10. There you can show. Why? Because that is short term provision. Working note number 10. Then last one, tax liability for the accounting year 31/3/2014 is fixed at 9,000. This you have to consider for adjustment purpose. So two times it will appear in the adjustment. Yes. So all these information now we have discussed. Now one by one we have to solve the problem. First thing we have to do here is statement of profit and loss. So first we have to prepare working notes to profit and loss. So there are 9 working note to profit and loss. So what is our format? First you have to do the working note of P&L, then do the format of P&L, then you can do the working note of balance sheet, then you can prepare the final vertical form of balance sheet. So here what you can do, first we will go for working note of P&L. Before that there is a taxation rules are there, so that we have to discuss, and there is one note is given for understanding. See this, as the closing stock is a current asset, it is to be shown in the financial statement either at cost or market price, whichever is lower. So that means here, if you see stock closing 25 and 22,500 is there, right? So under inventory, working note number 17, there you can show 22,500. Why? Because it is lower than 25,000. Then next one, taxation working note. Taxation working note we have to consider. So now taxation provision for the previous year. So where this information is given, taxation provision for the previous year. So now let us see the question. Now we'll see the question, taxation provision. See this, taxation provision 12,000 given in the trail balance. So it is already there in the trail balance. And what do you mean by provision? Whatever the tax you are going to pay in that particular financial year, you are keeping some amount aside to meet such expenses. So that is the meaning of provision. That is why 12,000 is kept for 2014-15. Now next thing we have to see, next information we have to see is actual tax liability. Where this information is given, that is given in the adjustment. See this, for the accounting year 31st 3 2014, that is actually it has to be 15, but that is fixed at 9,000. So now tax liability is 9,000, provision kept is 12,000. So what is the difference? 12,000 minus 9,000, that is 3,000 is a difference. So 3,000 is a excess taxation provision or unused taxation provision that you have to transfer, to the working note number 2. See this, 12,000 minus 9,000 excess taxation provision added to profit and loss account, that is 3,000, note number 2. So under note number 2 general reserve is there, there you shouldn't add. Then one more category, profit and loss account, that is brought forward information. After brought forward information you can show this information 3,000. Yes. Then tax paid, now we have settled adjustment of taxation provision. Now tax paid also we have to see. Tax paid, once again we will see the question, tax paid where it is given in the question. See this, tax paid is 10,000 given in the trail balance. But what is the actual tax liability? What is the actual tax liability? 9,000. Where that information is given? That information is given in the adjustment. So your liability is 9,000, but you are paying 10,000. So what do you call for that remaining 1,000? Extra amount to paid by the company. So what do you call that? Can you tell me? Your liability is 9,000, but company is paying 10,000 for the financial year. Where that 1,000 goes? Yes, tell me now. Akamsha, Amrita, Ankita, Disha, Kuchal, Narasimha, Nishant, Shifali, Suresh. Yes, tell me. Yes, anyone? Answer. Whether it is a advanced tax. Whether it is a advanced tax, 1,000, can you take that as advanced tax? Yes. So here you have to consider that 1,000 as advance tax. See this, tax paid in advance. So 10,000 actual tax paid, but liability is 9,000. So there is excess tax payment by the company. So 1,000 excess we will treat that as tax paid in advance. Such a tax you can claim. You can claim. So while filing the return ITR. Yes. So now that is note number 21. There you can show that is other current asset 1,000. Then provision for taxation for the current year, that is 10,000 given in the adjustment. See this, provision for taxation 10,000 given in the adjustment. Just they have given in the note where and all you have to take. This one we have already discussed. See this. Deducted in the statement of profit and loss under exceptional item and tax. I have already told. Then you have to show this under note number 10, that is short term provision. So all these additional working note you have to make. Why? Because in this problem there is a tax adjustments are there. That is why extra working note you have to make. Yes. After doing this working note, now let us go for the format note of statement of profit and loss account. So note number 22 as per the format, that is the revenue from operation. Why we are starting from note number 22? Because P&L working note we have to do first. So revenue from operation, only one information that we have already discussed, that is sale 1,24,000. This note number is over. Note number 22 is over. Now note number 23 is other income. Other income transfer fee credit side balance is given. That is why we have taken 1,200. Then interest on investment, again credit side information 1,500. Total other income you have to get, that is 1,200 plus 1,500. Total other income is 2,700. So by these two working note you can get total revenue. Why? That is working note number 22 plus working note number 23. You can easily get total revenue. Add both, you can get the revenue answer. So that we'll do while doing the format of P&L account. Now first we have to do the working note. So now note number 24. Note number 24 is for cost of material consumed, but in this question that is not there. What do you mean by material? Raw material, work in progress, finished goods, stock and space, anything given in the question that you have to consider here. But in this question not there, nil. Note number 25, purchase of stock in trade. So only purchase information, purchase return information is not there. Purchases not included in the purchase book, like what we did in the previous problem. There one adjustment was there. Purchases not included in the purchase book. In that case, you have to add to that purchases, and you have to add to the trade payable. But in this question, they have not. That is why purchases directly from the trail balance under note number 25, 64,400. You can write. Now, next working note is note number 26, changes in inventory. Changes in inventory, if you see, opening stock. Opening stock is given, that is 1/4/2014 in the trail balance, that is 12,000. And where this closing stock information is given, this is given in the adjustment. Closing stock 25,000, market value 22,500 given, but we have to take whichever is less. Market value or actual value, whichever is less we have to take. So less is 22,500. That is why we have taken 22,500. We want changes in inventory. So whatever the difference we have to find out. So what is the difference here? 10,500 is the difference, and this is a negative balance. Why? Opening stock is less, closing stock is more, means there are some unsold goods in the company's final stock or final balance. So that is why it is a negative balance. So negative balance, same thing you have to show in P&L account format. That is note number 26, changes in inventory. Next, note number 27 is about employee benefit expenses. Like we have already discussed wages. Wages is given to the employee, that you have to write directly from the trail balance 18,000. But for salary, salary given in the question 11 month salary, that is 9,900. But we want 1 year salary. 1 year salary means we have to find 1 month salary. How to find that 1 month salary? 9,900 divided by 11. If you do, you will get 1 month salary, that is 900. And that 1 month salary you can add to the 11 month salary in order to get 12 month salary. So outstanding salary is 900. Add to the 11 month salary. So final salary is 10,800. So now total. Final total, wages plus salary, final total, that is 28,800. Note number 27 is over. Next, note number 28 is about finance cost. So whenever we are talking about finance cost, first we have to see whether any debenture interest information is given in the question. In this, it is given. So where it is given, once again we have to see the question. See this, debenture interest. Where it is given, that we have to find out now. Just you have to look. See this. 2250 interest on debenture, that is nothing but debenture interest 2250 till 39 2014. So they have given interest for only 6 months, but we are doing the calculation for 1 year, so we want 1 year interest. So 6 month interest is 2250 means another 6 month interest is also 2250. That is a common sense. Or else what you can do, you can see the debentures. What is a debenture amount you can see. Where debenture information is given in this question, see this 15% debenture. That is 30,000 information is there. So 30,000 into 15% you have to make. Then you will get one amount. Then we want amount for 6 months. So into 6 by 12. If you do, you will get the remaining 6 month information. See this now. Debenture interest given in the trail balance 2250. Additional add outstanding interest, that is debenture value into a class of debenture, that is 15% into 6 by 12. You will get remaining 6 month interest 2250. So total debenture interest for 1 year, that is 4500. Note number 28 is over. So now like this you have to do two more working note, that is note number 29 and note number 30. So now note number 29 we have to see, that is depreciation and amortization expenses. So now let us see the note number 29. See this one. Depreciation on building given in the trail balance. So no problem, directly you can write 1600. Depreciation on machinery, again it is given in the trail balance, directly you can write 4000. Any other information given? No. So no write off information. Yes, but there is if you carefully see the adjustment once again we will see there is one write off information. See this write off 50% discount on debenture they have given. So now first we have to find out discount on debenture in trail balance, where it is given discount on debenture. Discount on debenture, yes, see this one 1500 discount on debenture 1500 is given. So they are saying 50% write off, so 1500 into 50%, so what is the final amount? 750. So 750 discount on debenture written off you have to show under depreciation and amortization expenses. So total of working note number 29, add all the things: depreciation on building, depreciation on machinery, discount on debenture written off, final total 6350. That is working note number 29. Last working note of P&L, that is other expenses. Other expenses working note. So here we have to see director fee. Director fee debit side information in the trail balance, that is other expense. Carriage on purchases, again it is given debit information, other expense, office expense, other expense. So all these three information, no adjustment. Directly from the trail balance, you have to recognize and you have to write under note number 30. But there is an adjustment for bad debt. See this now. Bad debt, we have to see the question. We have to see the question once again. Bad debt, where it is given in the trail balance. That we have to find out now. Bad debt, yes. See this. Bad debt 1300. 1300 given in the trail balance. So you have to take that information as other expenses. And to this you have to add a new RBD. How to get a new RBD? Just see the adjustment first point. Make a provision for doubtful debt at 5% on debtor. In order to find out new RBD, we want a debtor balance. Where debtor balance is given in the trail balance, that we have to see. See this debtor balance is 25,000. So on 25,000, take 5%. 25,000 into 5%. So now, what is the new RBD? 1,250. So add that to the bad debt. Then you will get one total. That is 1,300 plus 1,250. That is 2,550. From this total, you have to deduct the old RBD. Again, we have to see the question and we have to figure it out where old RBD is given. See this. Provision for doubtful debt or provision for bad debt already there in the trail balance. So that you have to take as old RBD 1400, deduct that information. See this, it is deducted. So final bad debt total written in the outer column is 1150. But we want other expenses final total. So add everything. Director fee, carriage on purchases, office expenses, bad debt final total. So other expenses final total is 11,650. So now note number 30 is over. So now we have prepared all the working note of profit and loss account. That means 9 working note we have prepared. After preparing this 9 working note, next thing we have to do is prepare the format of profit and loss account. That is statement of profit and loss account. Once we have to do, so see this. This is a format, particular note number and amount. So just whatever the information or whatever the info or particulars information is given in the format at the beginning, same thing you have to enter, particular and note number. Only amount column you have to see the working note. Whether there is any amount for this revenue from operation, then you have to write. If there is no amount, you can write not applicable or nil you can show. Only that you have to do in the format. So particular, note number and amount. So 3 columns. So first one, revenue from operation. Revenue from operation, working note number 22. That is only one, sale information 1,24,000. We have taken. Other income, working note number 23. See, like this we are discussing, right? So working note number 23 means you have to see working note number 23. Their final amount you have written. That amount you have to write. See this total 2700. So this 2700 you have to write here in the amount column. See this, we have taken 2700. So total revenue is 1,24,000 plus 2700, that is 1,26,700. So now we got the total revenue. Now, from total revenue, we have to deduct expenses. That is, total expenses we have to find out first. So, total expenses, there are 6 to 7 working note is there. That is, from working note number 24 to 30, 7 working note is there. So, 7 working note to total, first we have to find out. So, expenses, first one, cost of material consumed. In this question, not there. Raw material information not given. That is why nil. Purchase of a stock in a trade, working note number 25, only one information. That is about purchases. That is why 64,400 we have written. Changes in inventory, that we have adjusted in working note number 26. Let us see the working note number 26 final total. See this, 10,500 negative balance. So same negative balance you have to show here. Under working note number 26, see this, we have taken 10,500 negative information. Then employee benefit expenses. Working note number 27. Under employee benefit expenses, there is wages, there is salary, and any other information. If it is there, that also we have to see. See this total amount we have to write. Just you have to see the note number and write the total amount. 28,800. So write that information here. Then finance cost, working note number 28, 4,500. That is debenture interest is there. Depreciation and amortization expenses, working note number 29. There is depreciation on machinery, building, and one more thing, there is a write-off of discount on debenture. That is also included. So working note number 29, final total. See this, 6350. 6350 final total you have to write. Then other expenses, working note number 30, that final total of other expenses is 11,650. Then now what we have to do after doing these 24 to 30 working note, add this information 64,400 minus, because here one negative information is there, that is why minus 10,500 plus 28,800 plus 4,500 plus 6,350 plus 11,650. So now we get total expenses. Total expense is 1,05,200. Now we got total revenue, that is 1,26,700. So total revenue is more than the total expenses. That means what? There is a profit. There is a profit. So what is that profit amount? See this, profit before exceptional item and tax. So profit before exceptional item and tax is nothing but total revenue answer 1,26,700 minus total expenses answer 1,05,200. You get the difference amount, that is 21,500. That is profit before exceptional item and tax. From that you have to deduct exceptional item. In this question, exceptional item is not given. For example, corporate dividend tax. That is a tax expense, but it's an exceptional item. Why? First we have to find the dividend information, total dividend paid, then interim dividend paid. That we have to find out. Then on that total dividend, we have to, company has to pay the corporate dividend tax. So that information is not there, but in the previous problem it is asked. So in the previous problem, if you see there, it is given. So now tax expenses only one information, that is provision for taxation given in the adjustment. Adjustment it is given in the question. So once again we'll see the question. See this, in the adjustment they have given provision for taxation 10,000. So this 10,000 you have to record. That is, you have to deduct from profit before exceptional item and tax. 10,000 we have deducted. So final answer of profit and loss account format is known as profit for the period. Profit for the period you have to show in working note number 2 of the balance sheet. That is under reserves and surplus and under P&L account. There you have to add to the profit brought forward. There you have to add this information 11,500. I hope today's class you have